You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey trader, want to get rich quick? Well, good luck with that. If on the other hand you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. Today is Wednesday, 12th day of December, 2018. Hump Day. So, depending upon your time zone, you may be on that downward trajectory into the weekend already. West Coast folks got to wait a little bit longer, but hey, everybody's working for the weekend and it's halfway here. All right. Well, it's been an interesting day in the markets, probably an interesting day where you are, whoever you are. And by the way, whoever you are, thanks for being here, right now. We've been broadcasting since 2005. But every day that you show up, it's very special. It actually means something to us. So we're just glad you're here. Now, if you have questions, put them in the chat box. Nobody sees what you type except myself, Michael, Bert if he happened to be here, and Val. So just don't live in suspense. If you have a question about anything we discuss, anything we talk about, our methods, our indicators, our strategy, just put it in the chat box, okay? I've got a chart up of the S&P 500 E-mini Futures. If you can't see the chart, just go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. In about 30 seconds, you'll be registered through the end of the month. Now, when you're out and about away from the desk, you can tune in live by going to youtube.com/CFRN/live. It's really that simple. Now, this is a Concierge Trade Alert that you're looking at up on the screen. Last night, the alerts went out at, I pull it up, they went out at 7:55 p.m. Eastern. Consider buying 2651 on the S&P 500 E-mini. Now, you've probably heard me say at least once or twice on the show that important prices and important areas are almost always tested. I say that because, well, they are. 2651, that was the trigger on the Concierge Trade Alerts. We ran up 5 3/4 points back below the trigger, ran up 10 points back below the trigger, and ran up 30 points. Now, we do seem to be running into a little bit of resistance here at this 2681. That is not a weekly trading zone, not this week anyway. Our next good resistance overhead is still about 15 points away. So the market could kick it in gear today, tonight, tomorrow, Friday, and we could end this week substantially higher than we started. Remember, Sunday night on the Globex Open, we had a gap lower open, which is the polar opposite of what we had 2 Sunday nights ago. Gap, it wasn't that big of a gap, and it closed pretty quickly. Before, let's see, it closed, before Wall Street opened on Monday. Okay. When you have multiple triggers, the second and third trigger will often provide greater opportunity with less risk. I mean, the risk on this one's about as good as it gets, I guess. In there. Okay, got a little bit of news for you. I do. Let me find it. Here we go. London-based exchange, CEX, has notified its users that verification has now become mandatory for anyone wishing to trade on the platform. Holders of unverified accounts will have to choose between passing the verification process or just withdrawing their funds. The company has reassured clients that it's a straightforward process, using the mobile app to submit a photo of either an international passport, a national ID card, or a driver's license. They insist that the stored personal information is subjected to encryption for enhanced security. It seems like we've sort of lost the spirit of the crypto, of the Bitcoin, when it first came on the scene and was being used on Silk Road and other places. The anonymity factor, and it seems to be gone. The CEX team explained, "We believe that this update will help us provide you with an even more secure trading environment and even better trading opportunities. On our side, we'll continue improving our platform to make the crypto world more accessible. Hong Kong-based crypto exchange OKEX has announced it will update the ticker of Bitcoin Cash following the ABC chain from BCH ABC to BCH, and change that of Bitcoin SV from BCH SV to BSV on Thursday, December 13th at 5 a.m. Central. A new partnership between two technology providers promises to make the crypto tax reporting process more simple and straightforward for cannabis shops in the U.S. This is due to the integration of Node 40's cryptocurrency accounting platform into Alt36, a blockchain payments platform designed specifically for the cannabis industry. Now, the two companies say their partnership enables retailers to stay tax compliant and within the law, while the IRS will be aided in receiving the taxes it's due from the growing illegal marijuana industry. And this thing's just getting started. The CEO of Node 40 said, with the many cryptocurrency transactions, Alt36 facilitates our solution will make it simple for them to maintain accurate reporting and sound compliance. With this partnership, Node 40's Balance platform is expanding its reach to serve enterprise clients in addition to individual cryptocurrency holders. Now, some of you know this and maybe some of you don't. Banks operate under a federal charter. And since cannabis is still illegal on the federal level, if you have a dispensary and you sell the Mary Jane, when the customer pays you, you can't go put that money in the bank. I know, right? So, I was looking last night. You can, if you're a person who, if you have a business that markets to the cannabis industry, consumers, now this isn't business to business, I'm talking business to consumer. There's a master list of cannabis users, name, address, email address, telephone number, and there's, I think, 24 million people in that database. And you can buy it. And if you have products that they would... Now, here's the thing. If you've ever done any email marketing, you know that if you start sending stuff to someone else's list, you get shut down pretty quick. Because people complain, spam, and everything goes haywire. Well, according to the people who have this list, the people who opted in to the list have agreed to receive third-party offers. But what if they're too stoned to remember that they opted in? I don't know. Crypto tattoo trend? With the current marketing being what it is, some traders who are too new to have experienced past bear cycles are losing faith. One way for business leaders to demonstrate that they are fully committed and not going anywhere, according to Binance founder, is to get a tattoo. A tattoo? Last week, CZ showed off getting the Binance logo inked on his arm alongside two friends from the industry. He then joked with readers that the token listing process on his platform will ask promoters if they are willing to tattoo their own logo. Yes. Savage, I know, but I do believe strongly that founders should be fully committed to their project before they do an ICO. That's from the Binance founder. Following this, he said that his marketing team asked if they should run a promotional campaign for Binance tattoos, However, he declined because tattoo is the ultimate demonstration of loyalty. It should not be bought. It has to be voluntary. Okay, let's look at the numbers. These are numbers from around the world. These are cash markets. We'll talk about the futures here in just a bit. In the U.S., we have a green day. The Dow is up 377 points. That's 1.5%. The NASDAQ is up 141 points. That's 2%. S&P 500 is up 41 points. That's 1.5%. And the Russell 2000 is up 28 points. That's just shy of 2%. So a nice green healthy day here in the US of A. In fact, I drew this earlier and then I deleted it. And my platform locked up this morning, and all of my carefully drawn drawings on all these different charts gone like that. When you shut your platform down, and most people do, I never do, I wait for it to crash or get so slow that I have to reboot, but my platform runs 24/7. Anyway, I should, every day at a certain time, I should set an alarm. I have an Alexa show right here. Alexa, remind me to save my platform every day at 5 p.m.
Okay, I'll remind you every day at 5 p.m.
There you go. That's all you got to do. Now this is the Alexa show, the one with the little screen. You can watch videos, and you can, my kids even figured out how to watch TV on it. Shows they weren't supposed to be watching, but anyway. Okay, so that was the U.S. markets that we just went through. Let's take a look at the commodity basket. Crude oil up 43 cents, trading 52.08 last. And gold up $3.60, trading 1250.80 last. In the Asian markets at the close, the Nikkei was up 454 points, over 2%. Shanghai was up just 8 points, and the Hang Seng up 415 points. That's over 1.5%. Michael Cohen, I'm just watching this go by. Trump attorney Michael Cohen sentenced to 36 months in prison. Wow. Okay, European markets. It's green there too. Well, it's a big green radio day. FTSE closed the session up 73 points, 1%. The DAX up 148 points. That's 1.25%. And the CAC closed the session up 103 points. That's almost 2.25%. Green day in Asia, green day in Europe, and so far a green day here in the US of A. And steadily marching higher. We hit a little pocket here called some resistance. If we look across here, we can figure that had a little something to do with it. Where do we go from here? We'll take a bigger picture look when we come back. But for now, we'll invite Michael in to give us a recap of everything that happened in the live training room today. Are you there, Michael?
Michael is here.
Michael is here.
Hang on. I'm sending a quick email to Kurt. Okay. There.
Oh, Joan, I see that link you put in. I'll have to go take a look at that. Senate Agriculture Panel passes Farm Bill with hemp legalization. Oh, yeah, it looks like that's dated June 13th of this year. Oh, no, that's okay. Yeah. If you got it, bring it. All right, so let me drag that up and position it properly.
Okay.
There we go. You've got a webinar Friday. I'll put the link in for you guys before we're done. In fact, while Michael's doing the recap, I'll go out and grab it and just pop it right into the chat box. Okay, Michael, I'll hit mute, and I will be here when you're done.
Excellent. All right, I will get started then. I need to put that up. All right, here we go. Good afternoon, everyone. Today is the 12th day of December, 2018. It's 12/12/2018. If you have not taken a free trial with us, go to the homepage here at CFRN.net, and right over here on the right-hand column, it says 5-day free trial, apply.cfrn.net. You can click on that, or any one of these other things down here, free 5-day trial, proprietary indicators for free, and I think there's even another one way down at the bottom. Yep, right there. Click on any of them, and you will eventually be brought to this page, where all we ask for is your email, your first name, and how you found us. Hit that submit button. Then check your email. Okay, make sure it's a valid email address you put in there, because you're going to be sent a confirmation link. And you must click on the confirmation link. We don't know that you took the trial until you click on the confirmation link. Okay? Okay. The spreadsheet. We had a green day again today. And today, this date has been fighting me all morning. Anyway, here, let me copy this one. Copy that, and paste it in there. There we go. Today we made 23 ticks in crude, and we lost 8 ticks on the ES. Put us at plus $130 per contract. Okay, today it took 44 minutes and 4 trades to get to the goal for the day. At that point, we were up $100 per contract. Yeah. And we took a total of 9 trade opportunities this morning. Okay. So on the month, we're at 1,002. That's over 7 days, averaging 143 per day. On the year now, 35,976. That's over 229 days, averaging 157 per day. Now that is one contract, 2 hours per day. One contract, 2 hours per day. Okay. So we'll come and take a look at what we did. This part, we only traded the ES and crude today. We had one trade that we missed right here. That was a momentum long trade that would have been break even on the gold. And then we got into the break. This was at the end of the live training room this morning. And I told everyone that I didn't want to have anything to do with that, because it looks like it's just going to get choppy and stay choppy. And that's exactly what it did. On the euro, again, we didn't do anything. We missed 2 trades. No, we weren't trending here. We missed this long right here. That would have worked out had you have gotten it. And it looks like we missed this long right here also. I think it was going into the high of the day at the time, so that's probably why it's not highlighted. Then we came over here, and we didn't have anything because of the cycle. And then we went into the break, and it didn't do anything. So, kind of a slow day today on the euro. And the volume on the euro is starting to mix between the current contract and the next contract, which is the H contract. All right, on Friday, we'll probably be rolling to the H contract on all of these that are on the Z. Okay. Crude oil, that's where we had the majority of our stuff today. Majority of our opportunity. Crude had, crude inventories came out this morning at 10:30. And I had highlighted this area here like an hour before, saying look for it to get down to that area. Once the crude inventories come out, it should trade down to that area. And it did. It traded right down to it. See, I'll show you. If we scroll back this way a little bit, this is when the inventories came out. It missed it by 1 tick, but then it did get down there, consolidate, got back down there, consolidated. Then it took off from there. It's working its way back down there again. And let's see. We started out the morning right here. We missed a long trade right there. We missed a short trade right here. I was sliding my mouse over to hit my DOM with it, and it just dropped. And then we missed that one, and we picked up 5 ticks there. And then we picked up 9 ticks there to put us at plus 14. 6 ticks there to get us to plus 20. We had a break even there. And then after the inventories came out, we waited a while. There was a short right here. Now, this is the highest probability trade setup that we have. Okay, we had a trending market. The MA1 cross, price pulled away, price pulled back up, tested the BBC. Look down here in the slingshot, the cycle is red and below the green line. And up here, the MA1 is also red and descending. I missed that trade, but that was the highest probability trade setup that we had. And it did it all over again right here. Then it changed directions and started moving up. This is our second highest probability trade setup. It didn't hit the BBC on this one, but the MA1 is blue. The cycle is blue. And we have some good bullish separation between the green line and the cycle. Okay, we ended up getting we missed that one. We got a break even there. We missed that one. We picked up 1 tick there and 2 ticks there. And then the slingshot got all messed up. And then we get into the break here, and it looks like there was a short right here during the break. No, that cycle's going up too steep. Yeah, maybe just this short right here. That just happened a few minutes ago. And that was it during the break. Okay, so we ended with plus 23 on the crude. Plus 23 this morning. And let's see on the ES. On the ES, I'm scrolling. All right, on the ES, looks like I missed a short right here this morning, and then it got choppy, and the slingshot wasn't giving anything up. Then I took a long here, and it stopped me out. And then it went up and did what it should have done. And there was another long here that would have been a stop out had you taken it. Another long here that would have been a break even that I missed. And we did get a break even here. And then right in here was a shorting opportunity right there that I missed. And another long right here. This again is the highest probability trade setup. There was a long right here off the BBC that I missed. It worked out really well. Then it started getting choppy, and we got into the break. And during the break, it looks like there was a short right there that I missed. Oh well, it was during the break, so obviously. Yeah, this would have been a momentum. No, there's nothing here. Nothing here. This one over here would have been a momentum long right there. Okay, the reason there was nothing there was because we had not broken this dynamic resistance. Okay, it would have had to have been a momentum trade, and you don't take momentum trades into unbroken dynamic support or resistance. There was a shorting opportunity right in here off the BBC. Okay, and that was pretty much it. Pretty much it for the morning. Let me just go and see something here. Okay. Here we go. Go back to the spreadsheet. If you're going to read the spreadsheet, you read all the CFTC risk disclosures down at the bottom. Today is the 12th day of December 2018. We made 23 ticks on crude. We lost 8 ticks on the ES. That put us at plus 130 on the morning session. Today it took 44 minutes and 4 trades to get to the goal for the day. At that point, we're up $100 a contract, and we made 9 trades this morning. So on the month now, we're at $1,002. So for 7 days, averaging 143 per day. On the year, 35,976. That's over 229 days, averaging 157 per day. Now that's 1 contract, 2 hours per day. If you were to add 1 contract per month and do everything exactly as I had, then this is what you would be at right now, 226,395. Okay. Okay. If you have not taken a free trial with us, go to the home page at CFRN.net. And over here in the right-hand column, it says 5-day free trial, apply.cfrn.net. Click on that, and you'll be brought to this page where all we ask for is your email, your first name, and how you found us. Hit the submit button. Once you hit the submit button, you'll be sent a confirmation link. Click on the confirmation link. Okay? If you don't click the confirmation link, we don't know that you took the free trial. Okay? Okay. with that, we can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park.
Here's Dwayne.
There's Dwayne. Yes.
Okay. So, recap of the recap.
Today it took 44 minutes and 4 trades to get to $100 per contract.
That's all that matters is you get there.
That's right.
Consistency. Everybody wants consistent results, but very few people are willing to bring consistent effort to the table.
Yes, indeed.
And that's really the key. We are consistent in that we have not changed any rules regarding our methodology, or even a line of code and our indicators, and it's been over 5 years, right?
Yes, it has been. Well over 5 years.
Does your chart show this little gap here?
Let me look at your little gap. Hang on.
It's 11 a.m. Eastern yesterday. It's between the 11 a.m. and 11:30 candle. And then I got another little one right here.
Hang on, my data is still loading up.
And when I reloaded the platform, it was still there.
I'm scrolling. Almost there.
Scrolling. Oh, are you on a range chart?
Yeah, I'm going to look at it on a range chart, and then I'll go look at it on a 15-minute.
Okay.
Okay, it doesn't show anything on a range chart, but I'll look at it on a 30-minute. I think you are. Between 11 and 11:30 yesterday. No, I don't have a gap there.
Interesting. I wonder what happens if I bump it up to an hour.
I'm looking on 30-minute.
No, that was Sunday night. Yeah, on the hourly it goes away. Too bad my old co-host isn't here to tell me how raggedy my data is. He was real good about that.
He was. Yeah.
Okay, so we're now on our 4th 30-minute candle up here at this 2680 area, which the swing high 2678, that was last week's lowest weekly trading zone. So really what we're doing with the type of volatility that we have is we're still toying with that area, and price is going to have to continue to move higher. Price has got to get through that and then hold it on a pullback. Joan, those 30-second delays, they didn't, it wouldn't affect this data here because that was, days ago. Now, I want to ask you guys just a real simple question. I've been blowing in here every day and recapping the Concierge Trade Alerts for years, and I'm now in week 18. Well, plus the beta, it's really week 21, but officially week 18. Week 18, and I've been recapping those for you. And I know there's some folks in the audience that still, you're not really sure what's going on. The Concierge Trade Alerts, that's a static report that comes out hopefully every night before 9 p.m. Eastern. That's what I shoot for. Sometimes it's right after the Globex Open, and sometimes it's a little later. But those numbers come out, and they're good for the entire session, and they don't change. The Logic 247 those are dynamic in that they come out as the market develops. So John is here, so we're going to go ahead and open up his mic so we can chat with him. But if you have questions, because it was pretty simple last night, if you bought 2651, you had an opportunity to take 5 3/4 points out of the market. That's what the market made available. It's very difficult to get out of the swing high. But let me just show you this real quick. When you get an extended move like this, okay, is this an extended move? No. Is this? No. Is this? Yes. Okay. So, we don't have, this could be an exit signal right here. Okay. Because here it didn't close below the step line. This one could. And so, entering here at 2651 or here, okay, and then simply waiting for the exit signal would have put 30 points on the books. So I want you to look at this as I'm talking to John, and I want you to jot down any questions you have, and then after John and I talk, I'll be happy to answer them for you. Just put them in the chat box. Okay. All right, Michael, did you already open up his mic? Or?
I did, yeah.
Hey, John, welcome to the show.
I haven't heard his typical fumbling around with his mic as he comes on.
Yeah. That's like Dick Van Dyke. You know, he used to always trip over the same footstool. Do you remember that? You probably don't remember that.
I probably don't.
You're probably a little too young. Yep, the Dick Van Dyke Show. Every week, he would come out and fall over the same footstool. And as a kid, I'm like, okay, now I've seen him fall over. He's got to remember this time. You know, he's going to come out, he's going to remember that footstool's there in front of the chair, and he's not going to fall over it this time. But he always did. Jones says, so neither of those two red candles near the 10-point trade or the exit signal. Well, the exit signal only comes into play when you have an extended move. So, I mean, this, given the volatility that we're experiencing, that's not an extended move. That's not an extended move. But this is. And you can see this red is going to close. I mean, this was so close right here. But it closed on the line, not below it. So what we look for is the step line to cross over, which it did here. It's been on the back side of the CFMA1, but we just haven't had a red candle close below it. I mean, another minute or two there and it could have happened. This little doji sitting up top here. I wish it was up a little higher and a little more pronounced, but it isn't. So now here's an interesting spot. Okay, it has ducked below the step line. So I'm sure someone's wondering, we only have 9 minutes in this 30-minute candle at the moment. Since price has already got below the step line, why not just go ahead and get out? Well, you certainly can, because it's discretionary trading and we don't really have rules, we have guidelines, but the guideline says wait for the candle to close. Because you see here, you had a big red candle all the way down to the BBC and this trend line, but before the candle closed, it popped up and got back on the other side of that step line, which led to this and this and this and this. So again, number one, never feel obligated to take a trade just because there's an alert. That's not a good enough reason. You should be able to look at the chart and see something as well. Or if you just are using it for convenience sake and when you turn on the spigot, whatever's there, you just want to trade it, get your points and go, you can certainly do that as well. But waiting for the exit signal, you got to enter here and then you got to be patient. And that's hard to do sometimes. It's hard to sit on your hands because these are 30-minute candles. So from this first trigger, which happened at 20:30 last night, well, 8:30 this morning would have made 12 hours, and it's now 12:30. So 16 hours, and you're still in the trade. Is it possible for price to take a dive and knock you out? Yes, yes. Now, if it's a Logic 247, John, is that you? No, that was you.
No, that was me. Sorry.
Okay. Logic 247. No, you're good. When you hit the target or the final target, if price has momentum and it just sails right through that target, you got to ask yourself, why am I getting out of this trade? I got in at an important price, an important area, and obviously it's become an extended move. So I don't know when I'll get another one of these. Maybe today, maybe tomorrow, who knows? But why not make the most of this one? Now, is it possible to give some back? Yes, and so that's why once it sails through the target and the final target, at some point you want to grab that stop loss or secondary target, as we call it. You want to bring that thing up to the target or the final target if there's more than one target on that alert. So if price does do something weird and you just printed a huge red candle that came all the way back down here to your entry, well, worst case scenario is you still get out at the final target. So let's see, at that first down leg at 10 points, neither of those red candles are the oh, that's the same question. It doesn't qualify until it becomes an extended move. So this is just a little pop, this is a little pop. But see, here we put a leg, a retracement, and then we start to build another leg. That's when it becomes an extended move. Okay. On the Dow, last night's Concierge Trade Alert said to consider buying 24,530. There's a 44-point move, $5 per point. Price gets back below the trigger, pops again, 79 points, back below the trigger, and just to this swing high right here is 145 points. Tried to pull back and get below the trigger again, but it didn't quite make it. There's bullish momentum, and it sent it higher. Did we have an exit signal here? Well, we'll take a look. Okay, so we pulled back and the step line got below, and so we would need a red candle. Yep, right there. Step line crossed. It's on the back side of the CFMA1, and because it's a long trade, a red candle closing below it would give you an exit at 24649, which turns it into a little more than 100-point opportunity. You don't get out of the swing high. Again, it's very hard to do that because you don't know it's a swing high until after the fact. So at $5 a point, that's $500 per contract traded, because you have a definitive entry and a definitive exit right there. Now, as I said earlier, the Concierge Trade Alerts are static numbers. The Logic 247 dynamic, what's happening in the moment. And when those two point to the same place, that should get your attention. And if you're a passport holder, you have access to both the Logic 247 and the Concierge Trade Alerts. With that, the weekly trading zones, it makes it simple to triangulate entries and exits. Doesn't make it easy. There is no easy button in trading. Trading is not easy, but it can be simple. John, is the bottom of the rectangle of the candle the close for that time frame? Do you mean, yes. Okay, on a green candle, the top of the body will be the close, and on a red candle, the bottom of the body will be the close. And if you hover over it, it tells you the closing price. Now, that's if I got your question right. Oh, was that right? Okay, well, very good. Okay. Now, the Russell, it was a bumpy ride. We said to consider being long 1454. This only popped up to 55.1. And then it drew down 8 points. Okay. And that's $400 per contract. We don't want to risk more than $300 per contract per trade. And again, that's a guideline. My thought is, even if you have a large account and you've been trading for a very long time and you don't have a problem with large stop losses, if you have to pay more than $300 per contract per trade to find out if your idea, if the idea behind the trade is valid, if you got to pay more than $300 to get that answer, I say wait for the second or third trigger or another alert altogether where you don't have to risk more than $300. This one didn't get out of bed, but it also only pulled back, a couple points and then took off. And so we went from 54 to 74. So that's 20 points at $50 per point. That would be $1,000 per contract available. Now let's see if there's an exit signal, and if there is, then that could turn into per contract traded. Now we're talking about the swing high, and you already know the deal on that. So let's look. Not yet. And we're painting a green candle right now. This could go on for a while. I mean, you really never know. And so the step line is still on the north side of the CFMA1. So the rules are that the step line has to cross the CFMA1, whether it's a long or a short trade, and then an opposing colored candle. Like this is long, so we would need to see once it crosses over, we would need to see a red candle close below it. And at that closing price, that is your exit. Crude. Yeah. Michael, do you recall the highest price crude ever traded at?
I do not. I mean, highest price ever?
Yeah, it's been since we've been doing, all that we do.
Yeah, it's like $155 a barrel or something like that.
Well, pretty close. Yeah, I looked it up here at GCL, and I'll go weekly. Well, maybe I can get it daily. What? Oh, but that's like half the high. So I'm going to need to go weekly, I think, to pull in the data. Okay. And my previous co-host of years ago, he had a thing going on about there was going to be this up move in crude of biblical proportions. And what ended up happening is it fell from 140 down to, you know, we traded as low as, what, 30 bucks? Well, we were in the 30s here not too long ago. You know what? Let me bring up this chart. I can get more data. What? We're busy upgrading trading view with new technology and features. Please try to reload this page or return to the home page. Oh, you got to remind. I've got to get that site finished with the charts and all the stuff. Well, this is never happened before. I guess they really are working on something. Okay. John, is that you?
Yeah, sorry.
Okay.
I'm a bit late.
It's all right. We waited for you. I couldn't wait yesterday. I had to run out, so we ended the show quite early. But we're here today. Yeah. So sorry we missed you yesterday.
Great. It was kind of a busy day. You know, I actually felt, even though the market looked kind of awful for a while yesterday near the lows, it's amazing how it kind of rebuilt itself overnight. And I actually said, you know, when we were only just kind of in fact, if you remember, we kind of had a stab down in the evening last night before we kind of went back higher. In fact, we opened higher after hours, right? We gapped higher, and then we sold off, went down to a lower low, and then we turned and went up, and we actually sold when it gapped higher, sold it right away.
Are you talking about the ES, John? I don't show that gap higher open.
Sorry, a surge higher. It was almost a gap higher.
Okay, I got you. Okay.
It kind of, and then it just sort of fell apart, came back down, tested, and held. And then I started to see the possibility of this thing really going back on. And I said, look, during the evening, I said, don't be surprised this market's back up another 300 tomorrow morning, which, believe it or not, happened.
There you go. And you got it.
But I said, it's not. I don't think it's going to pull back like yesterday. It's not going to collapse like it did yesterday. I think the yesterday was some sort of a retest of the previous day that held. And if you remember, if you go back, the last time we made a big low, and it was a similar kind of a deal, you know, we had a really bad down day, 500-600 points, we came back, and then the following day we were negative again, and then after that the market began to repair itself, and that's basically what's happening today. And I also put pretty much a universal buyout on all these beaten up stocks, including Amazon and all the leaders near the lows both Monday and yesterday. So I'm pretty pleased with the way they're right now. I mean, Amazon's back about $1,700, which is pretty impressive, considering it was 1,600 at the lows, at the recent lows.
Right.
So look, it's not perfect yet by any means. There's still a risk of us falling over from here, but it is improving. Even FedEx, which has been beaten up tremendously, is trying to go higher today. It got absolutely shellacked here in the last week or so. So the big thing is, have we got enough in it to claw our way back more this week and claw and really reverse last week's damage? And we're making a very good effort at that right now, I have to say. We are, 3/4 of the way back off last week's, 2/3 of the way maybe back off last week's decline, which is pretty impressive, given last week's decline was a very big one, like it was equivalent of about 1,200-1,300 Dow points down. So what's going to be interesting is, and if you see the daily, if we start getting up towards 7,100 on the Nasdaq, and we start getting up towards, let's see, on the S&P, 27 and a half, somewhere like that. We could be setting the stage for just a monumental rebound here, explosive rebound. And I'm going to show you something, and I'm going to share this with everybody in the audience, because this is something really, really big. Let me just get to the weekly on this a second. No, the daily.
Hang on. Put this on weekly? You want this on weekly?
No, daily actually. Daily, I think is good enough. Yeah. Okay. What's going on is, we've got the mid caps, which are very, very sensitive. Remember they were going up relentlessly. They made lower lows against the April-May lows, the February lows. The other markets didn't. The S&P, the Dow did. Sorry, the Dow made lower lows. Sorry, let me get this straight. The Dow didn't make lower lows. The mid cap did, and the Nasdaq has probably performed the best against the February, April, May lows. But the most telling, indicator, perhaps, that this is potentially very bullish and very reminiscent of the 2015-16 correction, which was followed by a 10,000 point up move, never forget, is that the VIXs, if you look at the VIXs, and actually if you could pull those up.
I don't know if I can. The chart.
Well, I'll just
here we go. Yeah, I can. Okay, so what do you want, the VIX?
VXX, actually.
VXX. Got it. VXX. Why didn't it come up? Oh yeah, here it is. Okay, now I'm on weekly. What time frame you want?
Daily.
Daily. Okay. All right. There we go.
Okay. What's fascinating about this chart is, if you could expand it.
Expand it. Oh, like this?
Yeah, like show. Yeah. That's
okay.
A little bit more. Okay. No, what's very, very telling. A little bit. Squeeze up a little bit. Just back to where we were a second ago. No, the other way.
There.
Okay, that's about it.
Or the other way.
Yeah. Now what? This is a good sort of interrogative question for everybody to be kind of paying attention to. What stands out about this chart in terms of where the VIX is today, basis where we were earlier in the year when the VIX was a lot higher? What is the VIX telling us? And in my opinion, it's telling us that there's no conviction, there's not much conviction for further downside in the market, because the VIX is way off the previous highs of the year. Do you see that?
Mm-hmm. Yeah.
And that in other words, and when we were back at the April highs, that big reversal, usually when this happens, it means the VIX is going to go down a lot and we're going to have a big rally. And look at what happened in July when we made another similar top like that. I remember telling a few people back in late October that, gee, the VIX, the market looks like it's going to rally big, and we're almost at the same. Now, I'd be a little careful here, because we're not, we haven't broken down enough yet on this thing to convince me that we're not going to have more problems with the markets. Because if this thing were to go higher and suddenly break above the 4250, it would probably do so with authority, and there'd probably be some sort of crash. So, but at the moment that's not the case. And the most important thing is we've got all kinds of divergences between international markets, the U.S. markets. Most of the international markets didn't make lower lows as the U.S. did in recent days, and some in stocks, more than indices. But the fact that the mid cap, did get a bit overstretched on the downside, there's very positive divergence there, especially with the Nasdaq not making lower lows. This is potentially very positive. So But we are still at a fairly critical point here, you know, because we're kind of in ABC or zigzag type corrections. You know, if we were to have another down move from here into Christmas, that would be uncharacteristic. Usually, if you remember what I said at the beginning of December, I usually said, you know, the first couple of days of December are usually up. They were. Then very often it's soft from, you know, into the middle of December, specifically December 12th. Today is a very big day for me because I made one of my greatest calls ever on December 12th, 1994. When
that was before I met you.
Right, this is a good. It was before emails practically, and I wrote this in a magazine, and I was asked to write an article for a magazine, and I got all kinds of hate mail saying this, but the Dow was at about 3,300. Remember, we had blasted off from the 1991 January liftoff in the beginning of the Gulf War. That was the first wave of a third wave that took us from 1991 all the way to 2000. But 1994 was a year not unlike this year, where the market was sort of going negative. You know, it was interesting because the future leaders in 1994 were Dell, Microsoft, Intel. They were all up on the year, but the market in general was down. And it was, and remember, in early 1994 there was this assassination in Mexico, and really I remember I had actually visited some people in Mexico City the night it happened, and we were going up, and it was a long drive north, and we decided to stop at a hotel, and the TV was on, and there was a tremendous commotion going on, you know, in the local stations, and this guy, unfortunately, Luis Donaldo Colosio, who had just been assassinated in this rally in Tijuana, and of course worldwide consternation. And I remember I was in a brokerage office in Mexico City that afternoon, or I was in an investment bank, and I noticed the market made a reversal right before this event. It's amazing the way the market sees these things ahead of time.
It is, isn't it?
And yeah, and we had what we might be seeing the opposite this week. We actually made what I call a double weekly reversal, which is where the market had gone up really sharply the previous week, and then it reversed and it gave all its gains back from the previous week. So it was up and down bar, and remember, this is March something, I forget the date exactly. I think it was March 23rd. For the rest of the year, the market was basically down, and until around December 12th. And I was watching Wall Street Week, and Louis Rukeyser said, you know, the markets were the second most negative in its entire history, including the Depression, 1987. It was more negative than the bottom of the 87 crash. And that really you know, and they're sort of saying, you know, whenever it's this negative, you got to buy the market, just the same as March the 6th, 2009 and March the 9th, 2009, we were at the same point. So, you know, you have to summon the courage to do that when it's super negative, but it always works. It never fails. And so December 12th, I wrote this article explaining this phenomena, and I basically said that, you know, predicted the Dow would go up 2,000 points over the next 18 months. It not only did that, I think it even exceeded it, and, you know, then we upgraded it to 10,000 not too long thereafter. We were one of the first analysts to call for 10,000 Dow. Actually, we called for 11,000, just the same as we're calling for NASDAQ 11,000 before this cycle is over. Everything happened according to plan. So and what I'm trying to get across to people is we are almost at an identical point today in the precious metals, in terms of the fact that, you know, we're not that far away from all-time highs in the metals, and yet we're you know, at the lowest. We're absolutely at the lowest sentiment in history. It's never been this bad ever. And what's happening in those little charts that we saw a few weeks ago when we talked on the show, they're turning positive. In other words, what's really going on here, I mean, look, we're 1252, just hit it a minute ago. We're making new monthly highs on the silver. Platinum, which, as you know, has been a real dog. I've been telling people the last few days I'm virtually certain Platinum's about to bottom, and it bottomed. It didn't even make a lower low, and we're up $20. This is the best day in Platinum in a long, long time, and we put a buyout on it last night. It ran up a bit. We sold it. Came back this morning to put another buy on it before it took off. It's really taken off today. I mean, look, when Platinum's up 20 and gold's only up 4, that's really usually gold should be up 10.
Look at that daily
measure.
candle over there.
Yeah, no, it's looking great. And look at the previous. Look how it didn't take out the previous lows.
Right.
I mean, this is really starting to look very bullish. And look, there's a cup and handle. If you could put up the JNUG, JNUG, you'll see a kind of a cup and handle formation developing on the JNUG. By the way, the palladium is at virtual all-time highs right now. It's up 16, 1194. Hopefully it crack 2,000, 1,200 rather, momentarily. That would be very positive. That'll be a new all-time high. Remember not so long ago on this show in the summer when this thing was at 800, we said 1,600. That's where it's going. Well, it's halfway there. It's pretty on our call, and it's happened pretty quick. So the silver now is 1485. It honestly looks like $15 is within our sights, and I think we're going to 1550. I actually think look, this is deja vu all over again. This is just like September 2010, before silver suddenly took off from 18 on our prediction that it would hit $50 within 2 quarters. It kind of feels that way again. And for the benefit of the audience, there's a group of guys who wrote a report on Sunday night, and that bears out what I've been saying. And we adjusted even before this report came out, we already put an alert out saying 1550, 1575 is our near-term target on gold, and possibly up to 21 to 25 on silver. I think if the JNUG, you got silver up there right now.
Yeah, I can go back to the JNUG. Yeah, I can go back to it.
Sorry, I didn't realize you gotten the JNUG up. So
there you go.
yeah, if you could bunch that up a little bit, because it's easier to see. But you see how we made a lower, we made a kind of a double bottom on the lower, and we sort of break this 780. I mean, this thing could easily just go up to 12 pretty quick. If we break up, see the last time we went from 7, to see the way the thing went up. I mean, if we suddenly gapped up tomorrow and start a big day and get up towards 10, you'd almost have a sort of a multi-month island bottom there. And then if we gap through that previous resistance at 10, and start going into the teens, this thing could really fly higher. The markets, the gold has gotten a kind of a life of its own here, and the silver, in the way it's starting to move relentlessly higher. And what's interesting now is that the gold stocks have gone from being the laggards. They're actually leading the way higher. They made higher highs this morning. So, I don't know whether it's all to do with the Fed, or, if the Fed doesn't raise rates, maybe the market's going to think that they're behind the curve or something, and the markets could take off without them. If they raise rates, that could probably be pretty bullish as well. So it could be a win-win for the metals. But it certainly seems like, the fact that we're rallying this strong in December, going into the end of the year, has to be pretty encouraging, frankly. And remember, you've got the biggest short position of all time. You've got people who are short silver and gold at lower levels. And by the way, when you see silver up 25 and gold up 4, that is because the floor traders are putting on a bull spread. A bull spread is buy silver, sell gold. It's a long-term bullish position, and that's potentially what's going on here today. It's usually a sign. And the other thing is, look, the U.S. dollar made a new high for the year this morning. and didn't face gold. We're up on the day. When that happens, when gold and the dollar go up together, it's a really good sign, because when the dollar finally cracks, and it might be cracking right now, starting to crack, it's on a kind of a triple top. And if this dollar suddenly sort of unravels here in the next few days, I think that would be helpful to the markets, and it'd be very helpful to the metals. And it could produce the kind of surge that we're just talking about may happen. And then you've got the grains. I mean, if the Chinese are serious and they kind of, you know, give the US a Christmas present and put a big order in for grains here, you know, before Christmas or something, that would be just epic. That would really, you know, send these markets I think way higher. And again, remember we've had a correction a lot like late 2007 going into 2008, and remember 2008 was a huge year in commodities. It sort of feels like, you know, 2019 is going to be the same. It's going to be a very up year. And if the Fed, if this guy has been schooled in cycles, Powell, and he's got anything like Trump's back, he should be lowering rates next year and starting a whole new cycle, and get the economy moving ahead of the 2020 elections. There's no time to lose, because if you mistime it, you know, you have to get going sooner rather than later, because there's been, you know, one of the reasons why it didn't work for Obama was because the economy, they didn't get, you know, listen, they in spite of the amount of stimulus they did, they understimulated right from the get-go. If they'd done 1.5 trillion in stimulus instead of 787 trillion that they did, you know, this whole story of the last 8 years would have been much different. Would have been a much better recovery, and the markets probably would have performed better. But you know, Hillary might have won, so in a way it's a good thing that the things turned out the way they did, because we would have been down the tubes by now probably. But you know, they definitely need to get on with the job of making sure that the economy is tweaking, you know, is peaking in November 2020, just the way they did the last one. You know, the economy really peaked around September, October, or maybe in the second quarter, you know, with the GDP. But it was a pretty good job considering all things considered. But it definitely looks, you know, it's definitely a good day today for almost all markets. And by the way, there's a lot of I didn't have a chance to look at it before the show, but there's about 6 flying aircraft of various different types that are in the news, flying cars and air taxis and things that are in the news here in the last day or so. And maybe we can talk about that tomorrow. Something's happened with Lilium. I think they just did a very successful flight, and they're talking about putting a fleet of air taxis into operation fairly soon.
I'm sorry, John. What was that you said?
No, I was talking about the air taxis. The Lilium jet, Lilium jet, is talking about putting. Yeah, there's a lot of them. There's a bunch of them.
Audi's coming out with one.
Yeah, and there's some kind of a new big drone that somebody can actually fly in. It's actually, you know, it's a kind of a giant drone that you can step in and fly around in. Just put lilium.com. That's L-I-L.
The hatchback helicopter. All right. Spell it for me again.
L-I-L-I-U-M. I think it's one L. Yeah, there you go. No, it had jet. It actually, you had it there, but you didn't click it. Just put Lilium jet.
There we go. There we go.
Yeah, there you go. There's,
Now, speaking of cars, I know we're talking flying cars, but Uber is going public next year. Morgan Stanley is going to take them public. Have you heard the valuation they're talking about on this thing?
oh, it's probably stratospheric. Is it 100 billion or what?
120 billion.
Yeah, yeah. That must be one of the biggest IPOs of all time.
Yeah. Uber IPO, Morgan Stanley lands coveted Uber IPO role. Morgan Stanley, come on. Oh, Morgan Stanley beat out Goldman Sachs. Wow, that's interesting. See if they talk about any valuations here. Yep, right there, 120 billion. Uber was most recently valued at 72 billion and is expected to garner a valuation as high as 120 billion upon its stock market debut. Lyft, its key competitor in the US, also filed to go public, and they're going with JP Morgan Chase. Now they're only valued at 15.1 billion. What's the difference?
Well, they're smaller.
Okay, scale,
Yeah,
scale.
they're a lot smaller. Yeah. Still not bad for somebody who just copied an idea.
Yeah, well, I mean, we're talking about a company that they don't own the cars. They have employees, but I mean, in the beginning, I'm sure some guy was running this out of a coffee shop on his laptop. I mean, and look what it's grown to.
Yeah, it's amazing.
Do you think that's a realistic valuation? Or have they
Probably
been
will
smoking
be.
something?
Probably will be because they're growing at a phenomenal rate everywhere, and you know, the people who are using Uber are using it all the time. You know, they're repeat customers, people who just get used to it, and there's new people joining every day. You know, there's new people using the service. That's the thing. More and more.
Yeah. And that's an idea anybody could have come up with. You didn't have to be, you know, a genius or a rocket scientist. I mean, granted, you needed to understand the business and the demand, but who started Uber? Who was?
A fellow called something like Calvinic or something like that. His name is.
Because you would think that they would have come from the medallion families in New York City or something, but I don't think this person had any ties to the current taxi industry. And you know, those medallions used to fetch quite a fancy price before Uber, but now not so much.
Yeah, it's the same. It's kind of like stock exchange seats as well. You know, they wax and wane in value. But I think taxi medallions around the world are, you know, an endangered species. Almost.
No, I think you're right. I think you're right. Yeah, there's just no way for the old taxis to keep pace with what's going on here. It's just,
Okay, well, listen, thanks for the invite, Dwayne.
John, thank you very much. Enjoyed it, and we'll talk to you same time tomorrow.
Much obliged. Thanks.
Okay.
Bye-bye.
Bye-bye. In Orlando, the Mears Taxi Company merged with Uber last month. Interesting. I did not know that. Okay. Okay. All right, guys. I highlighted this area up here for you. You should expect some pretty good resistance. And it looks like that's where we're headed. Okay. We'll find out tomorrow. That's going to do it for today. Thanks so much for tuning in. Wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.